You've come to Pru-Asia from GE. You've been here about a year now. What's your impression of the business?
Well, we have a great set of businesses across the 12 markets that we operate in Asia. I've been very impressed by the experience and depth of management we have running those businesses. What originally brought me to Prudential was the scale and diversity of the businesses and the tremendous growth that Prudential's had in Asia over the last 10 years. But as I've gotten to know the businesses even better, what really excites me is the opportunity for even more growth, leveraging our scale across the region, being able to take the expertise that we have in one market and move it to other markets, being able to expand our partnerships and expand our distribution even further and continue that growth. So I think there are huge opportunities to continue what we're so good at in Asia.
But that's the thing. We've seen 20 or 30% growth in recent times, but that's dramatically slowed. Is Asia coming off the boil?
Absolutely not. Asia, if you look at the big picture, if you look at the fundamentals, Asia growth prospects are as strong as they've ever been. If you look at the 12 markets that we currently do business in, it represents 58% of the world's population. We've got strong growth, strong GDP growth, Asia far outpacing the rest of the world. You have very low penetration of products that we sell, very low penetration of savings and investment products that we really focus on. People have very high savings rates here in Asia, personal savings rates. So all of the fundamentals that have driven growth in the past 10 years are still just as strong as they ever were today.
But it did fall during the first half of the year. What happened?
Well, there were a few things that we did intentionally in the first half of the year that impacted our top-line growth. The first of those would have been more of a focus on value growth in Taiwan. So we purposely stayed away from lower margin business in Taiwan in order to create more value, better margin in our business that we were generating there. Taiwan's our biggest market on the insurance side, and so it's very important that we continue to generate good value business in that market. So top-line growth was down, but the margins were up considerably in Taiwan, so we were pleased about that. Another thing that we did, late last year, we changed our strategy in Japan. We cut away some corporate business which had lower margins. We've been focusing on bank assurance and the financial advisory channel, and we're making some good progress in Japan. But that, again, took off the top line growth. If you look at our top-line growth on the insurance side, we're up 12% year to date. If you strip out just the impact of the Japan strategy shift, we're up 20%. If you look at the third quarter of this year for all of our businesses, across all of our businesses, we had a 20% increase in the third quarter over the second quarter. So we think we have some really good momentum going into the rest of the year.
Asia's always delivered higher returns, 20%. The Pru has announced a rights issue for £1 billion for investment in the UK, which has targeted returns of 14%. Wouldn't it make more sense to use more of that money in Asia?
Well, the first thing that you have to understand is that the reason we get 20% returns in Asia is it's more in line with the risk profile of dealing with the kind of markets we are in out here in Asia. There's a higher risk profile, more diversity, and so it really does command a 20% return. In terms of capital and our growth in Asia, we've never been restrained by a lack of capital. We're growing value business as quickly as we possibly can.
But really, if you had more capital, couldn't you grow faster?
No, not really. We are really focusing on making sure that we deliver good value for the capital that we invest. Our businesses are more and more, across Asia, are more and more reaching the scale where we are generating more capital. And as a matter of fact, we are on track to not only be able to fund strong organic growth, but to be able to remit capital back to the group in 2006. We've announced that. So we feel very comfortable that we're growing good, solid business as fast as we possibly can.
Part of the cash from the rights issue is to allow you to invest in the potential opportunity to expand your holding in ICICI in India. Can you tell me a little bit more about that?
You know, we're very excited about our India business. Our India business this year is up 150% over last year, year to date. So we're excited about the growth prospects in India. The government has announced the intention to increase the foreign ownership limitation from 26%, which is what we own currently in the joint venture, up to 49%. The timing on that is a little bit unclear. There's some legislative changes that have to take place. We are in discussion with our partner, ICICI Bank. We have a very good relationship with the bank. There is the intention that we will be able to increase our ownership up to 49%, and I can't really tell you any more details about that right now.